Hello everyone, welcome back to the audit and attestation class. So in this class, we'll be understanding in detail about the firm system of quality control, including quality control at the engagement level, that is specifically to the internal controls at the engagement level. Let's dive into for more detail understanding of quality controls both at firm level as well as at the engagement level.
Where we are 2.6, we are here. Firm system quality control, including quality controls at the engagement level. So here we'll be learning like what all firm quality control standards should be, and what all things like as a firm policies they need to maintain, create, and ensure for a like overall control environment at firm level. Especially for the registered firm, it's like more rigorous, because like PCAUB do the recurring reviews of that firm quality control standard. And in addition to that, like for AICPA also, like we discussed earlier, those firm quality control standards are mandatory, and they also do like peer reviews. All right. So let's jump into the file. Okay, not much, just one page. Be with me. So here, what all things you need to keep in mind to ensure like firm quality control standards. First thing, like firm should encompass the following element. So when you are developing the quality control standard, you need to keep in mind these things. First one is leadership responsibility in forming and implementation of policy and procedure for the firm. So whosoever is the leader of the firm, like for example, any small size firm, then maybe a partner would be a leader. Like mid-size firm, they may have like, let's say 2 or 3 locations. So those respective location leader might be at the leadership position, right? And if you look at like big firm like PwC, EY, KPMG, Deloitte, so they are like CEO of the firm, or you can say managing director of the firm, and then at the respective location, you can say managing partner of that respective location would be considered as the leadership position for the firm. So it's been their primary responsibility to ensure and implement the policies and procedures required by the AICPA and PCAUB, right? What all things they need to ensure? The ethical requirements. So we understand like from the AICPA code of conduct and code of ethics, same way PCAUB code of conduct and code of ethics and independence rules, right? So those are being the responsibility of those key managing partners, or you can say CEO of the firm, or you can say the office managing partner, or the leadership in the respective CPA firm, to ensure that each individual partner and their team member are in compliance with the ethical requirement. For that, if you see like some of you are working with like EY, so you guys know like every year you are getting like independence checklist and independence questionnaire, which you need to file and submit. And every year you have to go through independence and ethics training, right? So those are like from where exactly it is coming. It is exactly coming from these quality control standard, which a firm need to maintain in compliance with the AICPA rules and regulation and PCAUB rules and regulation, right? Third is acceptance and continuance of client relationship. So we discuss in detail about the requirement for the acceptance and continuance, right? So what all things, like if you remember and recall, what are the critical things when we are accepting any new engagement we need to keep in mind as an auditor? Do you remember those? Requirement for accepting new engagement? Do you remember some of those? Thoda dhundla, or not at all?
Sir, can you please repeat once again, sir?
What are the requirement for accepting new client? We discuss acceptance and continuous topic, right? So what are the key points we discuss over there?
So if it's a new client, like we need to the which industry, and we can by reviewing the previous year financial statements. and communicating with the previous auditor,
Mm-hmm.
and I can remember only 3 points.
Yeah, most important thing is independence, right?
Independent.
First
Okay,
and
sir.
foremost important thing is
Okay, sir.
independence,
Independence.
right? Second thing is, do you have industry knowledge or not? If you have industry knowledge, it is good. But if you do not have industry knowledge, do you have capability to gain those knowledge, right? Do you have sufficient team to perform those procedures or not, right? So those all things like acceptance and or whether like management has any integrity issues or not, right? Those all things you need to keep in mind, which we have learned in acceptance and continuous procedure in detail in earlier class, right? So those all rules and regulation that firm make in their policies for before accepting any engagement, and every year when they plans to continue the engagement, certain procedures are mandatory. Those procedures from where those procedures are coming? Those procedures are coming from the firm internal quality control standard, which are in line with the AICPA rules and regulation and PCAUB rules and regulation, right? Third is HR policy and procedure. This also we discussed earlier. Within the firm, you need to make up HR policy and procedure that if any employee non-compliance with ethic rules, non-compliance with, you can say, code of conduct, or not ensuring the confidentiality of the client information, then you will not be promoting them, you will not be giving them increment, you will not be giving them like hikes, right? So those all should also be part of your HR policies and procedure. So the people who are working in Big Four, right, when you do your PMDP every year or performance discussion every year, or when you have certain goals, in that goals you have like technical training, non-technical training, right? You have compliance with ethics policies, code of conduct, right? Confidentiality. These all have been given appropriate weightage for consideration of your increments and promotions. So those all from where exactly are coming? Those all are coming from the firm internal quality control standard. And those internal control quality standards are being based on the AICP and PCAUB rules and regulation, which require a firm to ensure these things. Right? Make sense? For E point is engagement performance metrics. What is engagement performance metrics? Any idea?
No, sir.
Okay. So here the firm says like each engagement is an individual project, right? So likewise, how in IT, if you see like IT company, they do project. They might be doing project for EY, they might be doing project for Tesla, they might be doing project for Facebook, they might be doing project for Amazon, they might be doing project for Oracle, right? Let's say, for example, a company is TCS. So TCS might be doing some IT project with, let's say, EY, PwC, KPMG, Deloitte, Facebook, Tesla, Amazon, right? So for them, each company have different project, right? Same way as an audit firm. For me, each individual company for which I am conducting the audit is a project for me, right? And for each project, I need to maintain certain performance metrics, right? So how I need to measure? So whenever you are planning for any audit, what all things you plan? You plan like resources, right? Do the resource planning? Do you do the resource planning for any audit engagement?
Yes, sir.
Right? In that resource planning, what exactly you do? How much numbers of hour an individual at each level required to perform each financial statement line item audit, right? That's what do you do in the planning stage.
Right.
Have you seen any planning document for any audit engagement, like audit planning document?
No, sir. Till now, I only heard, but I have never seen, sir.
Okay, so maybe I'll find out someone and I'll show it to you guys. In that, what we do, like for example, partner, senior manager, assistant manager, senior, staff 1, staff 2, staff 3. So these all are list of resources which we have on this engagement, right? And which resources will be allocated at what particular time, and how much time he or she will be investing in doing, let's say, cash audit, bank audit, receivable audit, payable audit, sales audit, purchase audit, right? So respective financial statement line item audit, how much time like staff will be investing, how much time senior will be investing, how much time manager will be reviewing, and how much time partner will be reviewing, right? That complete budget is being prepared. And based on that budget, they calculate the cost for this engagement, and accordingly they add markup and uh, uh, this and share with the company, like this much would be our fees. Like, how do you calculate engagement audit fees, audit engagement fees? Based on the budget, actually, right? You prepare a budget, like this many hours would be required at staff levels, senior level, manager level, senior manager, partner, this much would be tax people required, this much would be IT people required, this much would time would be for actual required. And then you calculate the cost, and then you have certain overheads, right? You add them, and then you add some markup on it. That's how you calculate like expected audit fees for the respective engagement, and then you share the proposal with the client for the audit, right?
Once that has been signed, so everything is signed, engagement letter has been signed. So there's a scope to revisit that fee. Do we
Yes.
do that thing later on as well? Maybe after interim audit, we assess that
Yes.
more efforts are required or something like that.
That's very good question, Gurmeer. If there is a change in scope, then it
Okay.
is yes. And if there is any you can say delay from the management side, which is resulting into inefficiency. It happens with me or many, like 2 or 3 clients we have raised. Like when I was working with like EY Mumbai, so we got audit of a startup. They were going for a fundraising. So that's a first year audit, like loyalty rewards company. They are into like the business of calculation of the points which you get when you swipe any credit card, right? So they maintain like you can say point credited to the respective customer, point utilized by the respective customer, and utilized or redeemed by the customer, and points balances in the respective customer, and then when those points will get expired. So they are into this business, the kind of startup, and they were going for a fund raising in the back in 2012. So when I did this audit, so they're like, initially we agreed for a fees of like 8 lakh rupees at that point of time, right? But there was so much complexity, and the previous year accounting was not well, revenue recognition was not proper, and then accountant were changing. So we have ended up investing more than the very much more than the expected time, and then we have given certain you can say white paper also on their accounting policies to the management, and then we agreed to increase our fees based on extra cost and effort which we invested. So finally we charge up like around 14 lakh rupees to them. So it happened, like if there is an increase in scope, then definitely yes. And if there is delay from management side and which is resulting into inefficiency, and you have timely communicated to those charged with governance, then also yes.
Yeah,
Right.
okay. So we very usually see while we charge drop hours in
Yes.
EY.
Yeah. Right. So now coming to the engagement performance metrics. So engagement performance metrics, like once you make the budget, and then every week you do, or every month you do budget versus actual analysis, right? So that is called performance metrics, how your overall engagement is going on against the budget you have made. This is like financial performance metrics. Other can be qualitative performance metrics also, which include how your engagement team is following firm quality control standard, right? For example, firm quality control standard says without signing engagement letter, you cannot go for audit. Are you going to the audit before signing the engagement letter? Right? Then
No.
you're not following the quality control standard. You know, like in Big Four, you're working, you will not go. But if you say in small firm, they will start working even without signing engagement letter, right? Which is against the ethics and principles. Second is engagement efficiency. So how much overall efficiently your team is performing the audit engagement. how you have planned your overall audit procedure to bring more efficiency into the audit. So that is also criteria, or you can say KPI, when you are evaluating the performance metrics. And then in the peer reviews or PCOB review, how much positive comment you receive or how much negative comment you receive. That also result into a performance metrics for the engagement level, right? So those all things comes as an engagement performance metrics, and there are many more criteria also. These are certain example which were top of my head, so I shared here, but there might be more as well, right? Next is monitoring and supervision. So that is also being responsibility of the engagement partner who is signing the audit report on the financial statement, ensure the appropriate level of staff for performing, an appropriate level of seniors, managers, senior manager for reviewing their work. There should be maker and checker, there should be supervisor, and there should be a reviewer to it. So that is also they need to follow the protocol of timely and continuously monitoring and supervising the overall audit engagement. So that also is being the primary responsibility of the engagement partner, right? Second point is partner should be ultimately responsible for overall quality on each engagement. So here in terms of partner, they are saying the partner who is signing, basically signing partner has the ultimate responsibility or to ensure the quality of the engagement which they have delivered. If anything found wrong, anything found negligent, anything found misconduct, then first and foremost person who will be in trouble is the engagement
Signing
partner.
partner.
Signing partner, right? Third is
He'll be entitled to imprisonment if there's anything, right?
Yep.
And is there a consequence to the engagement team as well? Will they receive such things as well?
Yes.
Punishments
Like
and all.
if you are doing audit of PCOB, then up to manager level, there's a high chance. And even to the staff and senior, they will not get promotion and increment. And they will consider as the quality parameter low.
Okay.
Right. So when you have your internal PMDP, you have seen like you have 4 parameters. Right. So client leadership, what all are those?
Engagement metrics, client leadership, quality.
So in quality, you will get less rating.
Okay.
That will impact your overall performance, bonus, increment, and promotions.
Okay.
Right.
No, so that is internal consequences. I'm talking about the consequences from
Up to manager level.
Okay, from the court. So basically,
Yeah, from
PCOB.
PCOB or AICPA. Yeah.
Okay.
From court, majorly it's like partner. Major impact on signing partner, and then impact on quality review partner also, and the other partners who are involved. And from PCOB, it can go up to a manager level, and internally it can go up to staff level.
Okay.
And including offshore team.
In fact, internal consequences are even like if there's no issue on the client, but they have budget constraints, the consequences could be there due to internal politics and XYZ reasons.
No comment.
Very, very sensitive thing.
Sensitive topic.
Yeah.
Okay, third point. Partner should ensure team is competent and capable. So it's being primary responsibility of the partner to ensure the team they are aligned is capable and competent to conduct that audit. Right. Next is engagement team must have technical expertise and experience to deal with the complexity of the engagement. For example, if you got an engagement, bigger engagement, like let's say Intel, Palo Alto Network, or maybe Trimble, Scout, or maybe like let's say Tesla, Reebok, Nike. So you should have like the expertise in your team, right? You should have technical expertise to deal with the complex accounting matter or complex audit area in those kind of specialized, or you can say such a bigger client. Or for example, if you have to do audit of Bank of America, American Express, Goldman Sachs, McKinsey. So that kind of company should have like respective team who has expertise and experience in those technical area, and they are in a position to deal with those complexity, right? You should have manager, senior manager, partner, quality review partner who have already conducted such kind of such industries audits, right? So they have an idea to understand like risk, they can assess the risk better and plan audit procedures accordingly, right? Next is fifth point. Partners should ensure that team have a good understanding of legal and regulatory framework and professional standard. So here it's a partner responsibility to make sure that team have understanding of accounting standard, auditing standard, legal framework, SEC laws and regulation, right? If it is like a listed client, and if you have your company for which you are conducting audit have multi-geographical location, right? So you have understanding to deal with the complexity of different geographical location when you are doing audit of consolidated financial statement, right? So those kind of experience your team should have to deal with those things, right? Sixth is partner should take responsibility to undertake consultation when needed from appropriate party. So wherever it is being required to take consultation, it is a partner primary responsibility to take that consultation timely, because like we are CPA, we are not expert in every domain, right? For example, if any areas require actuarial involvement, we are not expert actuary. We should not be overconfident that we will do all the mathematical calculation like an actuarial. So wherever it is being specialized knowledge required, it's an auditor or it's a partner responsibility to involve that specialist, right? For example, CPA, we understand the tax, right? But we are not into tax practice, let's say. Then probably day to day, what all changes are going on in the tax law, we may not be aware of. So in such a big company, it's good to involve those tax specialists, right? We are a chartered accountant, we are a CPA, right? We may not have expertise in IT domain, right? We do not know like how SAP is working, how Oracle is working, how NetSuite is working, right? How this QuickBook is working. So it's good to involve IT expert, right? So for example, like there is a litigation going on, we are not expert in civil matter or criminal matter to give any judgment like how much penalty would be on the company. So it's better to involve lawyers wherever needed, right? So here like partner has to take a call in a timely manner to make the consultation from the relevant professional as and when needed, rather than showing themselves as an overconfident and expert in all domain, right? If you do not take consultation, then it would be considered as your negligence, right? Seventh point is, if engagement required quality review, then engagement partner shall not release the report until the quality review is completed. When quality review is required, I think I told you in first class, when quality review is required. What is quality review?
Basically, the peer
Peer
review
review.
Within the firm, outside the firm?
outside the firm.
No.
Quality.
Outside the firm will be peer review, AICPA review, PCAB review. Quality reviewer are within the firm, another partner within the firm, right? When it is mandatory to have quality review on the quality review partner on the engagement.
So mandatory means generally, I don't know about the USSR, about India means the turnover of the firm, and for every 3 years they should have a peer review.
No. For all the issuers, it is mandatory to have a quality reviewer when you are doing audit
Any
of
frequency, sir? Any frequency for every 1 year or
every year? You should have a quality reviewer.
inspection is like, sir, you said that if it is if the accounting firm has greater than or equal to 100 for every year once inspection. No, so for
That
by
is a
PCOB,
PCOB. That is a PCOB.
inspection.
So there are three type of reviewer. One is quality reviewer. That means within your firm, another partner is reviewing your work. That is called
Okay, sir.
quality review.
Okay, sir.
Second is peer review. That your firm work is being reviewed by another firm appointed by AICPA.
Okay, sir.
Third is PCOB review, which is PCOB appoints certain professional to review for the issuer's audit you have conducted. For that,
got it.
100 and 300 parameter was there.
Okay, sir.
Right? Ayush, Rahul, Kashish.
So quality review means the other partner of the firm will review the other partner work.
Yes. For example, if you are doing audit of Amazon and in your firm, let's say Ayush is also a partner, then Ayush will be reviewing the work performed by your team independently.
Okay.
That is called quality review partner. Right? Kashish, Rahul.
In peer review as well, like one audit firm, audit the other firm, right? So that
Here it is another firm appointed by AICPA.
Okay,
But
another
in
firm.
quality review within your firm, different partners.
Okay, got it.
Right? So what is quality review?
So quality review means the work done by one partner is reviewed by other partner of the firm for every once.
And when it is mandatory?
When we audit the issues.
Yes.
But
Right?
it is that is, for all the issues, it is important to have a quality review, and that is applicable. We will have to do it within a year.
Yes. And what is peer review?
Peer review means the work done by one firm is being reviewed by other public accounting firm.
And who appoint peer reviews?
AICPA.
AICPA.
And what is PCOB review?
PCOB, if the public accounting firm does audit greater than or equal to 100 for every 1 year once. If it is less than 100 for every 3 years once.
And who conduct that audit? Review?
PCOB.
PCOB appoint the professionals.
Professional. Oh, yes, sir.
Right? PCOB appoint the professionals to conduct the review of the CPA firm who has audited the issuers. Right?
Okay, sir. Yes, sir.
8th point, develop and follow policy and procedure to resolve the difference opinion within the team. For example, if there is a difference of opinion, right? You as an engagement partner think, let's say, doubtful debt provision of 1% is sufficient. But quality review partner says, no, it should be 1.5%. Then how do you resolve this issue?
So could you please repeat it?
For example, you are an engagement partner, signing partner, right? And you believe that provision for doubtful debt should be 1% of the sales, right? And quality review partner who is reviewing the work performed by your team, he said 1.5% of the sales should be provision for doubtful debt. Now there is a difference of opinion. How do you resolve this difference? Right? Practically these things happen, right? What Kashish is thinking may not, Sandeep might not be thinking the same way. Or what Ayush is thinking, Rahul might not be thinking in the same way. Right?
So we'll assess the assumptions for both the aspects by the signing partner and the quality partner.
Who will do that? Who will do that?
Maybe audit committee.
Audit committee for issuers.
This is about audit firm. So why you go to the audit committee says I am saying this, my other partner is saying
no. Yeah, that's true.
If you don't mind, can you please give the situation once again, sir, and explain the situation?
1 second, let me put in whiteboard. Let me put in whiteboard. Can you all see my whiteboard? Can you all see whiteboard?
Yes, sir.
So for example,
Yes.
this is ABC Limited. Sorry, ABC Limited. This is a company, right? So they have made provision for doubtful debt of, let's say, $1 million, which is 1% of sales. And let's say Ayush is engagement partner and he agreed to this. And now let's say Rahul is quality review partner, right? He said 1% is less. It should be 1.5% and provision should be $1.5 million. And the difference is 500,000, and which is material. So now in Ayush, who is a partner, and Rahul is also a partner, and let's say A&R associate is a CPA firm in which Ayush and Rahul are partners. Then how do you resolve this issue? And which number you will be comfortable, Ayush, in signing up the balance sheet?
Sir, to my knowledge, sir, the quality review standards are set by the public accounting firm.
You are going totally wrong.
I mean, no, I mean, sir, the quality standards, they will keep some standards, no, sir, for internal policies.
So who make those quality control standards?
Quality control standards are done by AICPA, sir.
No, quality control standards are made by AICPA, but need to be followed by the firm.
No, sir, it need not be
Yes.
followed, sir. What I mean to tell is, sir, Ayush calculated by following the quality control standards in the statutory audit.
No, Ayush has followed auditing standard.
Exactly, sir, auditing standard.
And he
Yes,
come with the, he is agree with the 1%. And
Yes, sir.
Rahul has also follow auditing standard. And he said, this is my assumption, it should be 1.5.
Since, sir, in
So
case of
basically what
subjective, if
Huh?
it's
So, sir, I think Rahul and Ayush will review the industry, and then on the basis of analysis, they will set up the audit process for that in the particular industry, and then they will prepare policies or statements for this.
Okay. Anyone else?
So
would
maybe
like-
what we can do is we might have when I am taking up an engagement and conducting the audit, and I have involved certain judgments to arrive at a certain number, I'll be having for the audit related procedures, I must have the backup and the calculations to support what I am stating in the financial statements.
No, that is what
why-
Rahul is reviewing. That is what Rahul is reviewing.
Sir,
And
both
Rahul
cannot
is-
be correct, no, sir.
Rahul,
Both
when he
cannot be
must-
correct, no, sir.
Rahul, when he will be reviewing, he must be giving me certain, why is there a reason that he needs to accept 1.5%? He will communicate that with me, and
so
I'll
let's say-
communicate why.
Yes, go ahead.
And I'll communicate that why is to I have these evidences basis which I am taking 1% of total sale as my provision for doubtful debt. Then we need to sit together and basically review. I need to review my workings and compare it with what Rahul has presented, and then reach a conclusion maybe as to what should be right and what should be wrong. So because that should be the only method by which a difference of opinion can be resolved, because unless otherwise it has been stated by a particular board, AICPA or someone, that in this case you need to go to this particular committee to maybe
Yeah,
resolve the
yeah,
difference.
yeah, yeah, yeah. Okay. Anyone else would like to add? What are you says? Hope you all understand the question, right?
Yes, sir. Question is understood.
This is like, this may be possible like in
Yes,
any
sir.
audit. When you have two different partners, you may have two different estimates, you may have two different judgments, you may have two different difference of opinion, right? That situation can be possible, right? You all agree to it?
Yes.
Yes, sir.
Right.
Yes.
So in that case of scenario, what this quality control standard says, the firm should have a mechanism to resolve such kind of issue. So that should be in the firm policy. That whether first they both need to sit together and go for a discussion, like you were saying, like why I'm agreeing to 1%, and he should say why 1.5%, and then they can mutually decide to it. One. Second, they may go to the internal firm committee, right? Or they may go for an arbitration. Someone within the firm who can do the arbitration, or there might be a possibility that engagement partner is signing, so he is taking ultimate responsibility. You can give the recommendation only, but you cannot take the ultimate responsibility. So that can also be possible. Whatsoever be the matter, it has to be clearly defined in the firm policy and procedures. That is
More
quality.
weightage in a layman language. More weightage is of signing partner instead
Yes,
of
because
quality
he is
control.
taking ultimate responsibility.
Okay.
Absolutely.
Because
So-
this in this example, there's no right or wrong answer, I would say, because
That's what I'm
everything is
saying.
based on assumptions.
Yes.
And there could be different assumptions. So we
Yes.
can't, it's not factual, it's judgmental, I would say.
Yes, yes, absolutely, 100% judgmental, absolutely
Right.
true. Because factual, there would not
But-
be difference of opinion within the auditor. Like there might be difference of
Right.
opinion among the auditor and auditee, but within the auditor, there should not be any difference of opinion for factual misstatement.
Okay.
It's only for the judgmental. That's very true. Very, very good point, Gurmeet. And then second thing, for second example I shared, for let's say any litigation matter, right? For litigation matter, like one partner is, let's say, Sandeep, and the quality review partner is, let's say, Kashish. Sandeep believe that this litigation, the possibility that company will lose is probable, right? And they can give the contingent liability disclosure of, let's say, $1 million. Whereas like Kashish, who is a quality review partner, he says it's not probable, it's almost confirmed. And you should take a provision for $1 million. Right? There might be a possibility because like it's a litigation matter. You may believe it's almost confirmed and one can believe it's probable on the same facts. Right? So then also difference of opinion could be possible. Again, there in the firm quality control standard, there should be a mechanism to resolve the difference of opinion. So it's not only among the quality review partner and the engagement partner, it can be among the staff and the manager. Right? For example, as a staff or as a senior, you come up with any evidence which is showing something wrong, and you go to the manager, and management says it's not material, leave it. Right? But you're still not comfortable. And what will be the mechanism? How do you raise your voice? Within the firm, there should be a clear policy. Like if you do not agree to your manager, you can go to the engagement partner. Right? Make sense?
Yeah, but does this practically ever happen? All these things, like I
Yeah,
have never
that's
been into
undue
audit.
influence. Undue influence.
So if we see on a
Okay.
smaller scale, it's very common where we do have weekly skip level meetings. So staff will have a meeting directly with the manager, a skip level of their seniors. Senior will have a skip level meeting with their senior managers. So if they are not comfortable anything regarding their managers, they can skip it to directly to senior management. So something like that, I would say.
Yes.
Giving just a small example.
Yeah. Likewise, for example, let's say I am a staff or I am a senior and I'm doing, let's say, reviewing the calculation of depreciation. And I've seen like plant and machinery, depreciation rate is not considered appropriately. Calculation is good, but rate is not good. And if we apply the appropriate rate, then it may result into increase in depreciation expense and it may result into the loss in the financial statement. right? And you went with this calculation, you're saying like depreciation rate are not right to the manager. And manager says, it's okay, we are already auditing this depreciation rate from last couple of years, and we have already signed this depreciation rate, ignore it, right? But you are still not comfortable. Then you can raise your voice to the engagement partner or senior manager, right? Those protocols should be there in the form. So it's not only about partner and quality review partner, it can be within the team also. Or maybe, for example, like you are audit engagement partner and there's a tax partner or tax senior manager who is doing like reviewing the income tax returns of the individual or provision for income tax, right? There might be possibility you disagree to the tax partner or tax partner disagree with you. So there should be a mechanism within the firm to resolve those differences. That's what quality control standard should say. Make sense?
Yes, sir.
Yes, sir.
Okay.
Yes,
Next
sir.
one, 9th point, policy and procedure to have necessary qualification for fulfillment of job responsibility. So like you all know, for a CPA firm, like CPA qualification is mandatory, right? In big consulting firm, they will not make you manager if you're not a CPA, right? So that's kind of mandatory firm policy should be there to have like respective qualification. If you are doing like IT audit, then you must have a CISA qualification, right? So those qualification requirements should also be part of the firm policies. Next is effective performance evaluation, compensation, and advancement procedure. This we discussed also earlier. Next is competency of partner, include understanding of the quality control system, professional code of conduct and code of ethics, understanding to serve, understanding of services to be performed, technical expertise, familiarity with the industry, professional judgment on the matter, and understanding of IT system. So these all things the partner should be competent enough to accept any engagement. If the partner is not comfortable with the technical expertise or with the industry expertise or the professional judgment in those respective industries, then he or she should not accept that engagement. Or if he or she is accepting that engagement, then it's being his or her responsibility to develop those expertise, right? 12th point is continuing professional education system. So every year there are certain number of hours of technical and non-technical training that CPA must do. So this should also be part of the quality control standard of the firm. If the CPA in the firm is not continuously doing professional education, then it should be impacting their performance, increment, bonus, and promotion, right? 13th is appropriate supervisory and monitoring system and process. So in the firm, within the firm also, there should be appropriate supervision and monitoring system. That means, like, for example, it's a CPA firm. Let's say 𝐂𝐡𝐚𝐩𝐿 is a CPA firm, and they have, let's say, 50 audit client. In 50 audit client, they have, let's say, 5 senior manager, 10 manager, or let's say 20 seniors and 20 staff, for example. So there should be an appropriate mechanism. What staff is doing is being reviewed by the senior, what senior is doing is being reviewed by the manager, and what all those managers and team is doing is reviewed by the senior manager, and those senior manager work is being reviewed by the engagement partner. So there should be a clear-cut protocol and clear-cut monitoring and supervision system. And within that firm, let's say 𝐂𝐡𝐚𝐩𝐿 are a CPA firm. Within that firm, in addition to just engagement level review, there should be a mechanism of firm review, so which include like quality partner review, quality review partner, which include like there might be an whistleblower policy. There might be, and like within the firm, there should be a separate committee to resolve there any difference of opinion, right? And there should be like AICPA appointing like peer reviews, right? All those mechanisms should be there in the firm, CPA firm. 14th is evaluation process of compliance with ethics and independence requirements. So every year, all the CPAs and the member of the CPA firm must be compliance with the independence and ethics requirements. So this mechanism should be there. So these all are quality control standard that a firm should follow, and the engagement leader and engagement partner to enforce it to the respective engagement team level. Make sense?
Yes, sir.
Any
Yes,
doubt
sir.
here?
Yes, sir.
Okay. So let's do some question. First one, which of the following elements should encompassed by quality control policy and procedure of an audit firm? So what all things should be there as per the quality control standards? First one is acceptance and continuance of client relationship and specific engagement. Do the CPA firm should have quality control standard for any acceptance and continuance of engagement? The answer is
Yes.
yes, right? Second is, do the CPA firm have a relevant ethical requirement?
Obviously.
Yes.
Yes. Do the
Yes.
CPA firm should have HR policies and procedure in place?
Yes, sir.
So we need to have a competent team.
Yeah. So do and yes, absolutely true. Do a CPA firm should have engagement performance metrics,
Yeah.
right? Do the CPA firm have monitoring mechanism?
Obviously, for quality review itself is monitoring.
Sorry.
Quality review itself is one type of monitoring.
Yes, absolutely. So answer is all the element listed above. Make sense?
Yes, sir.
Yes, sir.
Next question. The primary purpose of establishing quality control policy and procedure for deciding whether to accept a new client is. So here the question is on acceptance of new client. What is the purpose of quality control standard when you are accepting a new client? First one is monitoring significant deficiency in design and operation of the client internal control. This you will be able to know only after conducting the audit, right?
Yes, sir.
You cannot be
Yes.
aware of these facts before accepting an engagement, right? So first answer is not right.
पर ये तो आफ्टर में हुआ ना ये तो.
Yes. So second point is minimize the likelihood of association with the client whose management lack integrity. So when you are accepting any client, do you need to consider the management integrity?
Obviously, sir.
Right. So the second answer is yes. If management lack integrity, it's better to avoid those
Avoid the
kind of
client.
engagement, right? Third option is provide reasonable assurance that personnel will be adequately trained to fulfill their assigned responsibility. So this can be done after acceptance also, right? Fourth is identifying non-compliance with aspect of contractual agreement that affect the financial statement. So this is also after acceptance. When you conduct the audit, then you will be in a position to know these facts, right? So right answer is second one. Next question. The nature and extent of CPA firm quality control policy and procedure depend on what? So the call of the question is the nature of the firm quality control policy and procedure should be depend on what? First is CPA firm size. If you are 2 partners only and 2 staff, then how much policy should be there, how much procedure should be there? And if you have 10,000 employees, then what all policy and procedure should be there? So answer is yes, right? Size matter. Make sense? Second is nature of the CPA firm practice. So CPA firm, nature of the practice, whether you are doing consulting services only, whether you are also doing audit and attestation service. When you are doing audit and attestation service also, then quality control standard and policies and procedures are more rigorous, right? Make sense?
Yes, sir.
Yes,
So the second answer is also yes. Second option is also yes. Third is cost benefit consideration. So that also you need to give when you are accepting or when you are making policy and procedure for the CPA firm. So all the 3 options are right. So the third answer is right. Make sense?
पर cost benefit का नहीं समझ आया. First and second.
Cost benefit is, like for some controls to have may not have that much benefit for the firm perspective. So you need to evaluate how much time, energy you are investing in implementing any policy and procedure. Does that policy and procedure worth investing time and energy? For example, let's say you are a two partner and you have, like, let's say 2 staff. And in that, do you need to invest time and energy in making a policy of, let's say, let's say for this HR policies for this performance evaluation and all those rigorous policy, like which you may have like in big consulting firm? Do you require that much kind of rigorous HR policy, like your attendance record, your time sheet, and your you can say respective engagement works? Probably not, because you are directly monitoring your staff. You are two partner and you have staff, one staff each. So you might be directly day and night, and every week you are monitoring them closely. So do you need to implement that HR policy for the timesheet or for
No, sir.
all those things? So that implementation of that policy might be expensive affair. So probably it's not required for such a small firm,
Okay.
right?
Okay.
So this is it about chapter 1. So we are done with chapter 1. Request you all again to please review these notes and must do practice of the multiple choice question at least, right? So we have done with chapter 1.